Warren Buffett has a net worth of over $100 billion, and there has been many books written about him. Yet, he has never written a book on investing himself. However, there is a large body of knowledge of writings from Warren Buffett that he has given us for free. I've been very fortunate to have learned to invest from Warren himself. He has written a series of essays to the Berkshire Hathaway investors or shareholders over the years since he took over Berkshire Hathaway in 1965. These essays are filled with investing knowledge and wisdom, and in this video I'll show you exactly where they are and how to get access to them. At the end of the video, I'll tell you how you can learn all the nuggets from each and every single one of the letters and essays from Warren Buffett. Hello fellow compounders, welcome to the Always Be Compounding Club, the place where we learn how to build, compound, and enjoy wealth. I'm your host, Dennis Chen, full-time investor, MBA from the Wharton School, CFA charter holder, and financial book author. Welcome aboard. So let's get started. For those who don't know Warren Buffett, he's the only centibillionaire that made his money by solely investing in stock. He started investing at age 11, and he has been compounding wealth for the last 80 years. He invests through Berkshire Hathaway, the company that he acquired in 1965, and he has been part owner ever since. It's a publicly traded company. Any of you could buy stocks in the business. To learn from Warren Buffett, we'll call him Uncle Warren from now on, you need to do two things. One is know where to look for those nuggets of investment wisdom. And two, you need to put in the time and effort to learn. So let's go through and show you where to find these essays that I mentioned of Warren Buffett. They're available for free in the website of Berkshire Hathaway. So let's go to the website and take a look. Let me show you where to find the essays from Warren Buffett to his shareholders. Go to www.berkshirehathaway.com. Here's the website of the business. You go down right here in the second column in the middle where it says Warren Buffett's letters to shareholders. There you go. And you have the shareholder letters from Warren Buffett since 1977 all the way to 2021, and it gets updated every year. So if you go here, 1977, you get the text of the letter of that year. So what's important in the 1977 letter? In 1977, Warren Buffett published his key parameters for buying stock or buying businesses. And it's the parameters that he's been using ever since, and it's the parameters or the secret sauce that has allowed him to create over $100 billion of net worth in the past 80 years. So here it is. Here's his parameters right here in this paragraph. Okay. Let's see if there's a page number. I can't see a page number, but if you download this letter, it says, we select our marketable equity securities in much the same way that we will evaluate a business for acquisition in its entirety. So he's thinking of stocks not as pieces of paper, he's thinking of stocks as businesses. So here's what he says. We want the business to be one that we can understand, two, with favorable long-term prospects, three, operated by honest and competent people, and four, available at a very attractive price. That's the formula. That's Warren Buffett's secret formula. This is a key nugget of wisdom, of investing wisdom, that's available to you for free. Right there in 1977 letter. And he repeats it. If you look at 1978, he repeats it again. And I think he repeats it for several more episodes just to get the point across. So let's take a look at Warren Buffett's performance. Let's go to Berkshire Hathaway's, the letter that he sent to his investors for 2021. This letter came out and he wrote it for the year 2021. This is the letter that he sent, I think it was in February or March of 2022. So first page of the letter, we can see here the performance of Berkshire Hathaway versus S&P 500 since 1965. So on the right, let me move myself to this side. So on the right column, you have S&P 500, and in the middle column here is the Berkshire value. So if you take a look, over the last 50 some years, his compounded annual gain, or actually Berkshire Hathaway's compounded annual gain is 20.1% annualized versus 10.5% of the S&P 500. He practically beat the stock market over the last 50 years by 100%. If you had invested in the S&P 500 in 1965 till now, your overall gain till 2021 will be 30,909%. Not bad. Not bad for investing in the US stock market. But what if you had invested in Berkshire Hathaway? The annualized, the overall gain cumulative was 3,641,613%. I mean, that's that just blows you away. I mean, this guy, this Uncle Warren is like the greatest investor of all times in my book. So there you have it. I mean, I think there's not much more to say. I mean, Warren Buffett is a legend, investment legend, and you have access to all his letters for free right here in the Berkshire Hathaway website. So what can you find in these letters from Uncle Warren? Well, we actually find pearls of investment wisdom, or nuggets of wisdom, that we have to go and mine. There are lessons for passive investors, as defined by Ben Graham, and also there's lessons for enterprising investors that are willing to do some more work. At the beginning, I said that I would tell you how to easily learn all these nuggets of wisdom from these letters. Well, here it is. This video is the beginning of a series on lessons from the letters from Warren Buffett that I'll be doing in this channel. So once a month, unless you guys want it to be faster, if you do, please comment below. But my plan is to provide once a month a detailed analysis of a letter of Warren Buffett. You know, there's over 50 letters, so this series will continue on for, 4 years more or less. Stay tuned to the channel, just subscribe, and you'll be notified when a video of the series or one of the regular videos are available. So let me give you a brief overview of the topics that the letters contain. 1977, he provides the parameters for investing. 1980, he talks about something we call look-through earnings. And he also tackles the impact of inflation on investors. That's very important nowadays, given that now in 2022, inflation in the United States is increasing pretty high. In 1984, he talks about his philosophy of focused investing. And also he talks about the idea of stocks repurchasing, why it's good or bad. 1987, he overviews the concept of Mr. Market. To 1999, it's actually the 20th anniversary of the purchase of See's Candy. And he also talks about franchises. In the year 2000, he uses Aesop's fable of the bird in hand versus two in the bush to explain how you value business and discount cash flow. In the year 2011, Uncle Warren talks about gold and how it's a bad investment where he doesn't like gold and all this. In 2012, he talks about capital allocation and a dividend policy. In 2013, he reveals the instruction that he left for his wife's trust of investing 90% of his wife's money in S&P 500 and 10% in cash. I actually did a video about it. You can probably look at it in the channel. 2014 was the 50th anniversary since he started managing Berkshire Hathaway. In 2017, he wins a bet over a hedge fund manager investing in S&P versus investing in hedge funds. There's a lot of investment knowledge in these letters. I just touched over a couple of them. And join us in the series once a month to learn more about the letters from Warren Buffett. Thank you very much, and always be compounding. Take care. Bye-bye.